East. Anthony, what do we know about the shutdown then in Libya and the impact?
Good morning, Tom. Yeah, that's a major field for Libya. That's the El Feel field, also known as Elephant. So giving you kind of an idea of the importance in the local market and in the export markets there. That's a big field that the national oil companies declared force majeure on, meaning that they won't have to make those shipments to buyers. We've seen some shipments continuing over the weekend from some of the ports there in Libya, but with the amount of crude available and the amount of crude in storage dwindling as these shutdowns kind of cycle through the market. We have seen the eastern government initially declaring force majeure and then orders going into some fields even to restart over the weekend, mainly we think for domestic use and for refining, but that does bring some oil back into the market. But the real picture there is one of uncertainty, that we're not sure, again, which fields are going up, which fields are coming down, trying to find out still the actual level of production. Libya does about 1 million barrels a day normally. We're probably down to at least half of that, according to some of our reporting over the weekend, and we'll be seeing how that develops. And again, the uncertainty for the market about how long this potential disruption will last, Tom.
Okay, so we look at the disruption side and we continue to monitor the developments in Libya. Meanwhile, the question about China and Chinese demand with the softer economic data, and we saw that play out in the markets to some extent yesterday, Anthony. Where do we stand on that front? What is the latest in terms of the demand impulse from China and the outlook in the weeks and months ahead?
Yeah, the market is concerned about that because we're seeing focus on the construction market there in China and whether that's going to reduce demand for a lot of energy. And we're seeing also some additional refinery startups there, and that's going to potentially push more refined product into the rest of Asia. And so the market is really watching what is going to happen there in China. They do have export quotas for the refineries, which they need to see if they'll be able to fully use those, and that will have an impact on the margins for other refineries and then therefore the demand in Asia. So really what happens in China does have an impact on the wider market and then feeds back through into here, into the Middle East in terms of production decisions. Now we also know that OPEC Plus is supposed to go ahead with plans to add some barrels back into the market starting from October. These are some of the voluntary cuts that some members made, and that follows on a decision made in June to do so. So they'll be keenly watching the market here, watching that Chinese issue in terms of demand there, the Libyan disruption, as well as a lot of non-OPEC supply coming on from the U.S. and other countries in the Americas, Tom.